My name is Stefan. I'm head of marketing at StudentMarketing. And before we dive into the asset class and a few numbers that I'd like to share with you today, let me quickly introduce our company for those that don't know us. So we are a leading provider of student housing data and research. We do research only. We don't do transactions. We are MiFID II friendly. We are providing independent and unbiased data. A combination of primary and secondary research with mobile units doing on-the-ground or street-level interviews and data collections, such as student surveys, urban city planners, talks, city officials, universities, or student housing providers in the city. We're currently monitoring 20 countries, which basically means almost 100 cities across Europe, including 5,000 PBSA buildings and almost a million PBSA beds. We are able to analyze up to 250 KPIs per each city. And as you can see, we are also internationally established company. We're a UNWTO affiliate member, with our researchers being members of SMR, a research association. And so far we've been able to, and fortunate enough to work with and partner with some of the leading student housing investors. My presentation will be about give you some 2-3 key trends as we see it now in Europe or across Europe. First, let me start with the companies that are already engaged in student housing, which speaks for itself. It's actually more than 500 companies now that we see being active in student housing space. Some of them are very well known traditionally from the other or traditional asset classes, but they are already in the play. This is, as you can see, some of them are foreign or institutional investors, which is the first trend that I'd like to share with you. Simply, in the recent 12 to 18 months, we've seen more and more institutional investors or foreign capital flowing into student housing in Europe. This is because the asset class has become an established, has now enough liquidity, enough capital, and is crisis resilient. I'll like to talk about that a little bit later. What we are also doing is that we are mapping the both investors as well as operators across Europe, and this is a selection on purpose. So as you can see, right now we are talking about more than 200 investors or investment managers just in Germany. Also, this is a selection of operators that are actively involved in student housing across Europe. Some of them are operating their premises in Western or Southern Europe. Some of them are more focused on the CE region. Here we can see the overall picture of the student housing, the overall volume that has grown tenfold since 2007, from basically 700 million of euros to current almost 7 billion. And why is it so? Well, probably one of the key driving factors is because of the constant growth of international student numbers flowing into Europe. Europe is becoming more and more attractive study destination for international students coming from Asia or Latin America markets. And it's because the affordability of the studium or of the study, affordability of the accommodation. So we have low tuition fees, relatively affordable prices for the accommodation, and the rising quality of the entire international or the entire higher education in Europe. It is projected to grow this number of international students also in the foreseeable future, and it has been growing constantly even during the crisis 10 years ago on a global level. The other factor that is also important and interesting, not just for institutional investors obviously, is the yield rates. So one of the reasons why people are now seeking the investments or investment opportunity in student housing is that student housing offers relatively higher yield rates when it compares to residential, hotel, or other traditional asset classes. The average is somewhere in between 5 to 6.5, maybe 7%, depending on the country, market, and the market situation. Obviously, in terms of volume, it's not yet there. It's more of a niche sector. So to sum up the topic, the reasons why the student housing is crisis resilient and why the numbers of international student numbers or international foreign workers are rising is simply because of the few factors. First, the need for quality education, where Europe is getting well and is getting better. The need for searching the work, so enough job opportunities. Right now, Europe is doing very well. Also, young people are getting married later on, basically 5 years later than the previous generation, which creates additional space for student housing or micro-living operators in the need of the target audience to seek for the mobile accommodation. Also, there are right now more than 9 million workers across European Union that is seeking for the jobs, and there is more than 30% of the EU population that has rented the housing. That data is from 2016. This all resulted in, or is resulting in, the fact that the demand in private PBSA sector in Europe is basically constantly outstripping the supply. We see some 99% occupancy rates in general. So let me now talk a little bit more about the data and figures about supply, demand, prices and pipeline, which is what we also do in the company. Here you can see some better opportunities and some still good opportunities but rather limited on the right side per markets as countries. But what I think would be more interesting for you, especially for those that are new to the sector, is the detailed look on a city level basis. So this is a selected overview of cities and the demand numbers on international students. This is an overview of selected cities again and the supply numbers, so the existing PBSA beds. What would be even more interesting is to look at the supply-demand dynamics. This one is total students versus total beds, excluding UK in this case. And probably the most interesting one for you would be this slide, where we see the comparison between private supply, so private PBSA beds, and international students, again excluding UK, where you can see that some of the well-known university hubs are scoring really low supply numbers. I mentioned very quickly what we also do is we're measuring the pipeline. Again, a very purposeful selection for the German market. I guess that the majority of us here are from Germany. And basically, what we see now is that Germany is proving being one of the hottest markets in Europe, with Berlin, Hamburg topping the score sheet. And probably the last trend that I'd like to share with you today is basically the slight recent shift in student preferences. So when we go out and ask international students in front of universities or in front of their current living, we see that they are more and more preferring common areas with rich amenities and services included. So it's no longer just about price or proximity to the university or to the city center, but this particular one, the common areas, is becoming very important for students, such as cafeteria, bike storage, study room, terrace, restaurants, TV room. This is what is now considered to be sort of a must-have in student housing in Europe. So let me conclude with a couple of takeaways before I give the floor to our distinguished panelists and to Richard. So basically, we see the trend of foreign and institutional investors coming into the play and deploying their capital in Europe, buying portfolios. Right now, we see more than 100 portfolios established in Europe. We also see the students are more and more preferring common areas, amenities and facilities included. And finally, what I'd like to leave with you today is that according to various factors, be it income, valuation, yield rates, the number of international students, so the demand, the student housing, and also based on the past figures from the past crisis, the student housing is recession resilient.